Hi everybody, Jared here with DayTraders FX. I wanted to spend a little bit of time today, give you guys a little market update, a little bit of what I see happening in both the currency market and the stock market. A lot of people have been asking me, what do we expect with the election coming up? What should we be doing in the currency side of things? What should we be doing on stock side of things? And they're all very good questions. So let's have a little look at what we see happening in the stock market and in the currency market, because there are some important things that we need to watch for. I think there's some pretty good telltale signs of what we should see happen. But the one thing that you can always count on when there's something big like an election or something that we know is going to bring a lot of volatility, count on the unexpected. That's your safest bet. So if something crazy could happen, something crazy probably will happen. So it's best to just be prepared for that and make sure that we're not exposing ourselves too much to the volatility or the risk. But there are some important things to look at. And I think we've got some pretty great things to watch for. So let's have a look at the charts. Let's see a little bit of what we have going on here, and we will take it from there. Have a look at my screen real fast here. Okay, so what I see happening overall in just in the markets in general, let's just talk about the stock market itself, right? So if we're looking at the SPY, this is always kind of my my gauge for everything. You can look at the actual S&P index, which is SPX, but they both look the same. So, you know, it's the same picture here, SPY, SPX, whether you're looking at the ETF or the actual index itself, it's all fine. So what we want to find out are a couple of things, right? Number one, what is the stock market doing and what is the currency market doing in general, right? What do we want to kind of see happen here? What are some of the things that we see starting to play out? So first of all, the stock market, obviously, here is our big coronavirus sell-off business right there, right? That was our big kind of everyone freak out, everybody panic. We had this big, nice comeback, and the stock market's been uptrending pretty well ever since. The thing that's kind of, you know, continues to kind of get my attention is basically this right here, where we have this nice little lower high, this kind of failure to even make a double top. It's a little concerning to me. Now, a couple of things that we want to keep an eye on here is, yes, we do have a little bit of a, you know, lower high, and it might be starting to make the old lazy M that we've seen, you know, before, right, where we see that kind of movement happen. And I wouldn't be surprised to see that kind of thing happen, honestly. But we are still kind of overall uptrending here, right? The moving averages that I have on my charts, 200 moving average, and then I've got a 50 up here as well. And these are both good indicators to kind of just help us identify trend and momentum. So for the most part, we're staying around the shorter term moving averages and staying above the longer term moving averages. So there still is an uptrend. There still is a bit of momentum to the upside, but it certainly is lagging the last 3 or 4 or 5 days. So we have to keep an eye on that. So as I look at this, I've got several stock positions running, several option positions running. And I look at this and I just think, generally speaking, you know, where do we think the stock market might go? And I think it's going to go overall up. I think the stock market always goes up, but how much of a dip are we going to see happen before it continues higher? And that's the question. And I'm trying to kind of position myself, if you think about it in this light, I'm trying to position myself with stocks that have recovered less, right? So if we just peek over here at, say, what are some stocks that have recovered a ton? You know, we can look at any tech stocks, right? You can look at Netflix. You know, Netflix has been doing pretty super well here, but they've definitely kind of started to encounter some pretty intense resistance up here. But Netflix has been doing pretty well overall. So I look at that and I think I'm a little less interested in Netflix, and I'm certainly less interested in Netflix now that we have, you know, kind of a big double top here. There might be a big bearish play in the works. They had earnings just yesterday, I think, and they said, oh, subscribers are down because there's only so many people on the planet. You can't get 9 billion subscribers to Netflix unless they expand to Mars or something. Anyway, but the charts are starting to kind of tell us something, right? Big double top there, but it's had a big recovery since, you know, since the coronavirus sell-off, right? And this was certainly a lot less extreme on Netflix than it was in a lot of other stocks. Big sell-off there, but it's been pretty strong. I like the stocks that have had much less recovery. I like the airline stocks. I just keep trading these things. But there's something very important that we've got to keep an eye on here with the airline stocks. And that is the fact that, yes, they have recovered less, but they're starting to give us some pretty interesting, you know, kind of looks here. We're starting to get some pretty interesting kind of patterns where we're seeing things start to wedge and give us pennants and so on, where we kind of need to wait for a breakout. You know, we're kind of at that point where we say, okay, you know, I'm throwing a little bit of guesswork into this one at this point, and I just need to wait for this to break out. So we have this great little pattern here on Delta, and this pattern tells us that Delta Airlines could go certainly any one of the two directions. If Delta goes down, I'm buying the holy smokes out of it. If Delta goes up, then I think we're on our way to a bigger recovery. We're on our way into this kind of bigger movement here, right? So we're looking to get back in towards those highs of the high 50s and even into the 60s and so on. So I think that's probably a pretty safe bet for Delta. And if they go down, I think we could just be maybe looking at something more like a double bottom before, you know, a continuation higher. So I like that. I think that's great. So breaking out of this, getting back up above that 200 moving average tells us, you know, these guys are figuring out what to do with their lack of money and lack of business, and maybe, you know, the vaccine that's going to come along and the other things airlines are going to come up with to get people traveling again are underway. So I think that's a great looking chart. One more airline chart, which is Southwest. I've been trading this one quite a bit. I'm not currently in anything Southwest related, but I like this guy. And this one right here, we have, I would say, a pretty nice little rounded bottoming pattern here. So it's not quite a head and shoulders. It's not quite a double bottom. It's just kind of a nice rounded bottoming pattern. This right here is our neckline. Hold on, boy, the charts are just popping up everywhere. This right here is our neckline, and this is telling us that if we get Delta above about 42, 50, 60 area, I think, sorry, I say Delta, I meant Southwest. If we get Southwest above that 42 kind of 50, 60 area, I think Southwest is ready for a big move. So of course, airlines are susceptible to a whole bunch of things, but I'm looking at this as this is very near telling us that a bottom is in place. But we do got to break that neckline. We do have to get above this area for us to say, okay, we're safe, we're good. Okay, so that's Southwest and Delta. I like the banking stocks as well. I do actually have a trade on Bank of America, and I like this one. But it's the same, you know, it's a very similar kind of chart as Delta, right? Which is, okay, this could break either way. What's going to happen here? I'm positioned pretty well, so if it does break out down, I'll be fine. If it breaks out up, I'll be extra fine, so that's okay as well. But I do like this one a lot. I think that this is a great stock. So I'm looking at these kind of consumer cyclical stocks, right? Retail, you know, we have this one that kind of keeps popping up, American Eagle Outfitters. You know, same kind of situation, right? This thing has been in a downtrend for a real long time, and now we've got this nice neckline here, and American Eagle's looking pretty good. So I'm liking these kinds of stocks that are only going to benefit as the economy gets, you know, cranking more, as consumer habits get kind of back to where they were. I know we can kind of count on some change with consumer habits, but I think these retail stocks stand to benefit a lot. I think banking stocks will do well. I think airline stocks will do well. I think some of these, you know, just retail stuff, people are buying stocks are going to do well. Okay, so there's a couple of stocks I'm looking at, but I am being super, super careful. I know that we have the election coming up, and I don't really want to stand in front of that any more than I have to, because there is a lot of potential unknowns that are going to happen there, including, you know, I think the thing everybody's planning on is how much of a fight is there going to be after the election? Who won? Who lost? Blah, blah, blah. So we want to kind of be careful with that and just not put ourselves into harm's way too much there. Okay, so be careful. Look for those consumer-related stocks. I think things are going to go well there. There's some great option plays to be had. We'll talk more about what those option plays are, but that's a little bit of what I see happening there. Let's jump over to the currencies for a minute. One currency that has kept my attention very, very heavily for a pretty darn long amount of time here is the Aussie CAD. The Aussie CAD. This thing has just continued kind of making its move and making its run. Now, what I wanted to see out of the Aussie CAD and what I want to see out of these Aussie pairs is really a long-term dip, sorry, a shorter-term dip and a longer-term uptrend. And I think we've got that coming. So you see this pretty well established rounded top here. That's a pretty big deal on Aussie CAD. Pretty big rounded top. We've started to see this breaking the neckline, right? So it's pretty safe to say that somewhere at about 9,400, we had all that resistance, we have all this support, and now it's below. And it took a little dip. Remember, this is the 200 moving average. This is a great trending moving average. And oftentimes when a currency pair spends a long period of time above or below a moving average, it doesn't just cross over and take off and drop like a rock, right? So I'm not surprised to see the Aussie CAD making a dip here before, a pullback as it's trying to break out and move lower. Not super surprised about that. That's pretty, pretty expected. We're getting a nice daily bullish engulfing candle. It's going to probably run up and hit some of those pivots. All good. Totally expecting that. But now what I want to see here is some pullback and some opportunities to continue selling the Aussie CAD. I think that this thing has to run down to at least the 90 level. That's kind of my minimum target that I'm looking for, is about the 90 level. And ultimately, I think it can get down below 8,900, somewhere just below 8,900. I think that's a pretty safe bet. We've got some nice missed pivots back here, and those are great targets. Those are super great things to look for. So I think we have a good opportunity for that right there. But this is breaking out. It's pulling back. It's going to retest some of this resistance and hopefully continue lower for us. And that's what I want to see. I'm going to be looking at time frames like, like 1 hour charts, right? We have a lot of upper targets here, weekly pivot, daily pivot, some market imbalances. So I want to see if this Aussie CAD can do something like this and something like that, right? That's kind of what I'm looking for. But for the moment, I really want to stay focused on these long-term charts. I think the Aussie CAD can make a big dip and create kind of a massive head and shoulders pattern for us, right? A big, massive head and shoulders pattern, something that's going to look a little bit like this, right? Big run down, pull back, big run down, big run up, pull back, and then, the big move up. I kind of think that's the route we're headed here, but I think we have a lot more to go on the downside, another 300 to 500 pips. And then I'll be looking for opportunities to buy this and just trade this thing to the moon. So anyway, that's what we're looking for on Aussie CAD. That's a big focus for me. I'm looking for very similar types of things to happen with the Aussie yen as well. I think the stock market, like I said, is probably going to get a little volatile and a little crazy. So I'm very much looking for opportunities to trade yen pairs down. As the stock market gets more panicked and less stable, and I can't imagine we're going to have a ton of stability going through the election, then that's where where the Japanese yen should shine. And so I'm going to be looking for opportunities to trade this Japanese yen lower, particularly against the Australian dollar. I think there's a great opportunity here. I think our big level that we need to break is 7,400. So and here we're sitting at about 7,450. I think selling below 7,400 will be crucial. So I think that's what we're going to be, kind of be looking for there. So selling below 7,400 should be the course of attack we should take. We have a nice rounded top. We have a good neckline here. Just trying to make kind of a bit of a head and shoulders pattern. So I think we've got some good opportunities on Aussie yen. So that's, I'm looking at Aussie CAD. I'm looking at Aussie yen for big shorts, big opportunities there. Let me talk about one more Aussie pair that I'm pretty excited about. That's this little guy right here, the pound Aussie. Now, you'll probably notice that I'm looking for these kinds of things to happen quite a bit, and that is rounded tops and rounded bottoms, right? I'm certainly looking for Aussie weakness to continue, and I think that a form of that can also be a very, very good play is the pound Aussie. So as we start to get the pound Aussie making a run here, big rounded bottom, big neckline, and it's already breaking that. Now remember, it's coming up to the 200 moving average, so don't be surprised to see, some of this kind of movement here. As we look at the hourly chart, don't be surprised to see this thing pull back, you know, maybe dip down and then kind of continue up. Enough to kind of scare everybody out of the market. But it's also hitting a lot of resistance and that 200 moving average. My ultimate target, well, I don't know ultimate, but I think a very easy target here should be 18800. If we can't get to 18800, who knows what to do? All bets are off at that point. But if we can get to 18800, I bet we can get to 190, and I bet we can get up into that 196 as well. I think pound Aussie has huge potential. So I think that this is going to be a really good opportunity, and it could create, you know, a massive head and shoulders pattern for us, right? Get this thing, you know, back up into the 190s and above 190s, create a huge right shoulder there, and we could see, you know, a really big move like that happening for, you know, for Aussie strength to continue, for pound weakness to continue. But I think for the moment, for the near term, I really like that as a bullish play and a bullish trade. So I think we've got that in our favor. Dollar pairs, you know, of course we have to talk about dollar pairs. Dollar pairs are going to inevitably move a lot with the election. There's going to be a lot of, you know, do we need safe haven? Do we not need safe haven? You know, where are we headed there? So dollar pairs are likely to move quite a bit. Be careful of that. The dollar is consolidating right here. We have the dollar index consolidating between about 94.70 and about 92, you know, 100. So we have kind of a 200 to 300 pip channel of the dollar index just kind of sitting and waiting here. I think we have, you know, a pretty big pattern in play with the dollar index here, and I think we probably have more downward movement as soon as kind of things calm down. Probably another leg lower on the dollar index. So we'll see how that goes. I'm going to try to kind of steer clear of dollar pairs going into the election because I think they're a little too much at a decision point. Long term, big double top should continue down. Near term, a lot of consolidation through this area, so I'm going to kind of steer clear a little bit of dollar pairs. Okay, so that's what I wanted to talk about today, guys. Hopefully that gives you a little bit of an idea of what to look at. We have Aussie CAD. In fact, I'll write it right here. We have Aussie CAD, Aussie Yen, Pound Aussie. And then we have things like airlines, Delta, Southwest, Bank of America. I think these are, you know, AEO, American Eagle Outfitters. I think these are some good stocks to look for. So these are a couple of things where I would say, look, find an opportunity, do some light trading, be careful. The election is going to be wild. So don't think that it won't be because it's very likely to be quite a moment. So let's be careful with that. But thanks for watching, guys. I hope that's helpful. I hope that gives you a couple of ideas of, I would say, where my brain is and what I'm looking at in this market. I think we have, you know, either a big non-event coming with the election or we have a huge, massive event. So we've got to be a little bit careful of that volatility. But I think big movements in the stock market look like they're kind of setting up, and big movements in the currency market look like they're setting up. And I think these two are going to balance each other out pretty nicely. We should get some good opportunities on Aussie pairs. We should get some good opportunities on some of these consumer retail type stocks. And I think we can do well with everything. So the thing that I cannot stress enough is manage your risk, right? Manage your risk, guys. You got to keep an eye on that. And so that is first and foremost, especially as we're going into a big event like we are. So thanks for watching, guys. I hope that's helpful. Please keep an eye on these videos, keep an eye on these updates. I'll try to keep you guys going with as many how-to and market update videos as I can produce. And remember, you can follow me on all the typical social media places: Twitter, DayTraders FX, YouTube, DayTraders FX, Facebook, DayTraders FX. Pretty much anything you can think of, it's DayTraders FX, and I'm there. So thanks for watching, guys. Good luck on everything. Have a lovely, fantastic rest of your day. Thanks, everybody.